I think a lot of us were quite surprised. We thought that would really stimulate buying, but it got slammed back down, and it almost looked like it was like a speculator pump. Went up and then went back down, but then we had that kind of really kind of weird price action. If you're watching it, it just smoothly went up and up and up and up and up, and then Elon Musk did his little change of his profile to show Bitcoin. That was the first pump. The second one was the SEC announcement, and it showed us that some of that buying, that really weird buying, it was just up and up and up, was actually Tesla buying their 1.5 billion. Was it 1.5? Yeah, 1.5 billion. Currently it's 38,600, which is very, and this thing just keeps rising over time. So it's very seldom do you get it to drop even a little bit. So I don't think, that prior high we had at 40 to 42,000 before we got the pullback, that's probably going to find that's going to be a very, very strong support zone. Particularly since the floor's it's going to be there by the time, if we ever ran down there, and I'm not saying we will, if we ever ran down there, the floor support, that model was never broken in the history of Bitcoin. I have to wrap my head around it. Like I had it in my head in the last bear market. I think it's just diminishing returns from memory. When the price is going up and go to infinity, right? Literally, if the US dollar goes away, but in the bear market, it can't go to below zero. It can only go to zero, so you can only capture the gain of the price. So Bitcoin's at like $10,000 and it goes to say 3,000. You're only going to capture that move downwards, whatever that is. Like that's $7,000 of movement. If it goes to zero, you're going to capture $10,000 of movement. So it's very diminishing return. So it's not as great to short in the bear market in that regard, especially in this kind of asset class, which is, it's essentially an adoption curve where we're going from nobody in the world having Bitcoin to majority of the world, and that by the way is 2% of the world own it right now. So you can imagine the growth that is to come. What is it, 1994 I think, in terms of internet adoption. That was when we had the 140 million people using Bitcoin, or in that case the internet back then. It's higher than that. That was January, by the way. That was the January figure. Trying to short the internet, it's not a great strategy. You might get lucky timing it right over the next few weeks or months before and the bear markets don't last more than 12 months. So yeah, I mean, and remember the last bull market was 100x, and the bear market went down from 20,000 to 3,000. So there was barely a $16,500 move. You're not going to do the kind of ridiculous returns you get on a long market. So you get these people like Parabolic Trav who will just disappear from the whole scene and only pop up when the bull market's there because he's on. He'll just go and take his holiday in the Bahamas or whatever he does.
3-year holiday.
Yeah, exactly. Because there's a lot of work shorting a bear market, and you're playing chicken with a freight train, really. Yeah, I'm reading the same. There's a number of touch points regarding that. Like I did a study a while back. I just mentioned earlier. It was really a measure of this. There's this term called reflexiveness. I think it's a George Soros term, which is essentially this feedback loop where in commodity markets, where as the asset price goes up, then there's less selling, and it's a feedback loop, and it tends to go more exponential. So I did a little calculation from the on-chain data we had, and you can kind of measure the capital that's been stored in Bitcoin, because you can kind of see when the purchaser bought and what they paid for it, and that was actually the capital they put in. So you can do a ratio of the capital that has been stored in Bitcoin and how that tracks upwards versus how the price moves upwards. And therefore you get this ratio of how much the actual price goes up to the amount of buying that was done with it. And it's been, it didn't really support the theory. We always thought in the bull market, less and less people would actually sell because it's going up. But actually what happened, from the data you can see that actually people did sell into it. These old time whales we can tell it was the old time whales because you can see the age of those coins being sold. They bought it like pennies, and so they sold into the first bull runs, and then they sold into the 2013 run, they sold into the 2017 run, and across the span of that bull market, the dollar gain of Bitcoin was static compared to how much money was coming in. Yet this one's been unique because that is ramping up. As the price is going up, there's less capital needed to push it up even further because there's fewer people selling into it. So I'm seeing that on the data. Say you're 30 and you bought into Bitcoin 10 years ago, and now you've got like $500 million of Bitcoin, and you're 40. You probably got 20 good years to spend that money. So you're not really in the game of collecting more Bitcoins because it's going up exponentially. You're in the business of selling and trying to figure out what to do with that money because you've now got the problem of having too much money without, probably without a project to spend it on, like maybe Elon Musk would have a project to spend that kind of money on to get us to Mars. But so it's I think it's a different mindset, and certainly the OGs have constantly been selling, and that's been creating a very nice distribution, which flies in the face of this FUD that the popular media like to throw at Bitcoin, where it's controlled by a very select few. It's what we're actually seeing from the data is that it's being distributed, and more so. It does make sense, right? Because it's so scarce, and if fiat is going to self-destruct, and I do think that we're coming into a new era of money. I don't think it's too crazy to think that the structure of our money is about to be reinvented. I mean, Ray Dalio will talk about this as a reset of a long-term debt cycle. Every time, every 100 years, we reset the money. So maybe we reinvent it with something like Bitcoin that backs it, or Bitcoin becomes it. I think a lot of maximalists think that. So if that's the case, you're never going to sell. Yeah, it's valid. I think we're in I don't know when that will happen. I think in the shorter term, I honestly don't understand the structure of what's happening behind the scenes when you go and get maybe a BlockFi loan, and you over collateralize your Bitcoin. So you're essentially giving it to another player. They're figuring out how to make money on that by having more Bitcoins than the loan you've taken out, but essentially you're doing a margin position. You're buying, you're getting a loan on a fiat in this case on your Bitcoin. So you're probably going to be more sensitive to selling your Bitcoins now because a lot rides on it. If the Bitcoin price starts to drop, you're probably going to call in that loan, or you're going to sell your Bitcoins. You'll probably sell more Bitcoins because you've grabbed a loan to buy some stuff.